The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the November 18th, marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I must master each and every day. So let's begin our day with some of my favorite empowering beliefs. And that's this. I don't know if it applies to you, but I know it applies to me, and that's this. You know, I most of the time have no idea of the giant capacity that I can immediately command when I focus all of my resources on mastering a single area of life. And the areas that I consider to be important that I want to master? Well, it's simply mastering trading. Another, though, is time out there. You see, once we master time, we understand that we typically overestimate when we accomplish in a year. Think about this, folks. We're already at November, 18th. Really not that far away from New Year's Eve. You know, the one time that most people decide to say, okay, this is the change that I'm going to make in my life. In fact, do you know what percentage of people actually are resolute about the resolution that they make? Guess what percentage? I mean, I was reading an article. I love reading. I read at least 30 minutes a day out there. Was reading an article at one point in time over the weekend out here, and the article said that 98%. You guys might have thought it was even higher. That 98% of folks that make a resolution, they're not really resolute about it at all. They fail. Well, and it's most of the times because they set it as a goal. Here, I'll give you. I guess I'm just switching over from really what I was going to talk about. But so what? It's my show out here. Here, because we're a little ways away. Look, you can set your goals whenever you want, but instead of get rid of the word goals. If you just simply remove the word goals, because goals are something that most people fail at. I mean, 98% of the people set goals out there. Instead, what you want to do, folks, is change the word goal and change it to outcome, because outcomes are actually something that you will achieve when you know your outcome. When you know your outcome, you will do whatever it takes. You will move hills. You will move mountains out there. You will achieve outcomes. Goals, get rid of those goals. Don't teach your kids about goal setting out there. It doesn't really happen. What is the outcome? Because when you change that one little shift there, when you change it to an outcome, then, folks, what you do is you may underestimate how long it will take you to get there in a year. I know I do that. I know I take a look at the project, whether it's a programming project, something it is that I'm trying to set up out there. It always takes longer than even my most conservative approaches out there. I don't know if that happens to you. It does to me. But what I do know is that I always underestimate what it is that I can actually achieve in a decade. Don't know why it works that way. I just know that it works out there. And so, most of us, some of us, don't achieve what we truly want because we never really direct our focus out there. So don't dabble your way through life, folks. Change those goals and change them into outcomes. Let's go check out the outcomes of the market out here. Right now, you've got the Dow. It's trading up 35 points, trading out at 15,997. The S&P 500, it's flat. It's down 72 cents, trading at 17.97. NASDAQ Composite off 6 points out here, trading at 39.79. Russell 2000 off a point at 11.15. NASDAQ 100 off 8 points at 34.14. New York Stock Exchange is up 12 points. That's a positive out here. Net advancing issues, well, that's actually net declining issues, but not that big of a deal at the moment. Off about 60 issues out there, so no real damage here done just yet. Gold is back $6. That's trading down to $12.81. Silver's off 13 cents right now. That's traded at $20.59. Silver's the one we really got to be paying attention to out here. Probably gives us the bigger clue as to what's going on, since it is the weaker of the two. Weaker just simply because of the swing point that it is trading with inside. Natural gas, that's been on a nice move, a little rocket ship up there, up another point, or up another penny right now, trading out at 367. You've got, did I say light sweet crude? That's back 12 cents, so a flat market out there, 93.71. Our call number is 877-927-6648. let's go start taking a look at, first let's take a look at what occurred on Friday out here. If you're watching us on Tiger TV, thanks so much for doing that. Obviously inside the den, we appreciate that. And if you're listening on your radio or your mobile device, I'll tell you what it is we're looking at. It's the New York Stock Exchange. Of course, you can get this show streamed live to your mobile device, your smart pad, whatever it is you might have out there by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 smartphones. Click on that. The show will stream live to you. You'll be taking a look at a nice 3 drive to a top pattern that failed out there. Miserable failure out here. The failure coming at the key reversal bearish engulfing trading session from October 30th, the high of which is 10-127.63. It's trading out at 10-197.96. Now, that area has not been tested. We'll draw a line across the top of my screen. We're going to get rid of this line out here. That should be an area of support. That area of support set up by that bearish engulfing candle out there. Old support, or old resistance in this case here, is really what it was set up, should in fact become new support. So it would be very meaningful to the downside if in fact you see it close back inside the lower part of its trading range, which is going to be that 3 drive to a top, which is going to be the 10,127.63. That's something that you want to be paying attention to. Moving back to that area, rejecting that area, holding that area, that in fact would be more bullish out here. We had the oscillators move above zero. Summation index ticked up. You would need a total of 559 or more net declining issues in order for the bears to actually take control of the New York Stock Exchange. So the wider swath, the wider breadth of the marketplace broke through a 3 drive to a top pattern, which is a very bearish reversal signal, and that was taken out. That's why the top of that pattern out there, the October 30th high at 10-127.63, is so important to be paying attention to, either bullish or bearish out there. That's what's going on inside of the New York Stock Exchange. Let's go take a look at the S&P 500. Let's go see what it is doing. S&P 500 really has no overhead resistance because it's up at new all-time highs, or it hit a new all-time high here intra-session. 1802 was the number, 1802.33. It's trading at 1797 out here. Unless it gets impeded by its primary trading range boundary lines out here. 1817, 1812 is the likely outcome. That's where we take a look at the price areas of 2 AB equals CD up patterns. One is the 1 to 1.618. That's the red one that you're taking a look at, and the red A to B equals CD pattern. That's the one coming off of the August 28th low, the high out here on September 19th, and the retracement back in that little morning star candle formation, 3-day candle formation on October the 9th, October the 10th, and October the 8th out there. So a nice reversal signal. That was your C point. Crushed right through the 1-to-1 level. Stopped at the 1 to 1.272. Gave us a reversal signal, but that key reversal session, and there's 2 of them out there. Now, they should have been also very bearish. That's a trading session from October 30th, as well as the trading session from November 7th. 2 key reversals were not able to contain price. Now, where is the support area for the S&P 500? I just gave it to you. It's really the tops of those key reversal sessions out here. The highest high, let's use that one, the more conservative. That's October 30th high, 1775.22 out there. That should act as support. We'll see if, in fact, now, we'll see if that occurs. That doesn't mean that price will move down into that level. If you did see a close today below the open session of Friday, which is 1790.66, well, then that becomes your likely outcome as a test of that area. So that's what's going on inside of the S&P 500 cash index. If we take a look at the Dow right now, Dow actually, just trying to play some catch-up ball out here. However, that catch-up ball inside of the Dow could be a move into the, 16.6 area. Why? Because it had been the weak link, meaning all it had been doing is trading in a sideways consolidation zone. That's the yellow box you're looking at on my screen out here. That yellow box really starting back in the May 2013 time frame. So what do we have? About 10 months from a 5-month consolidation zone, in essence, that was set up inside of the Dow 1,000-point consolidation. It's broken through that. It's broken up above resistance lines. It has no resistance in sight other than these primary trading range boundary lines, which we'll take a look at we'll go ahead and draw that in on the Dow here in a little bit, or I'll try to. Maybe I might look at some of the ETF structures inside the S&P 500 out there. But right now, the charts, you've got no bearish reversal signals inside the Dow, other than the Dow. If you look at the kind of the middle bottom portion of my chart, the red squiggly line on my screen, that is your 14-period relative strength indicator, and that is saying that price inside the Dow has moved into the overbought territory, and so a bit of a pullback is in the cards. Now, the pullback inside the number inside the Dow that I would be paying attention to is its key reversal session. That took place on November the 7th. That was a bearish engulfing key reversal. Should have acted as resistance. Well, it did really act as resistance for a couple of trading sessions. It broke above that. That now becomes support. That makes the November 7th date, the high, 15,797.68. That's a number you want to go ahead and put on your calendar or on your pad out there, because it closed below 15,797.68 would all of a sudden get the Dow back in the lower part of its trading range out there. So that's what's going on inside of the Dow. If we take a look at the Russell 2000 out here, Russell 2000 right now is back at $1.80, so no big deal out there. That's the futures contract. The Russell itself is back $1.19, trading out 11.15 out here. If we take a look at its patterns, now the Russell has not been able to break as the S&P has, as the Dow has, and as the NYSE. So what once was the darling, it is not the darling at the moment, because it has struggled to break above resistance. Its resistance happens to be that trading range session from October 30th. That high is 11.2326. If you see the Russell 2000 get above 11.2326, my assumption is that the Dow, the S&P, and the NYSE will also be at higher price, and then you will just simply have what is right now a little bit of a laggard join the party. But thus far, it has not joined the party, so that's something to pay attention to. That is on the Russell 2000. If you take a look at the composite, well, the composite has joined the party. It is trading out right now at 39.79. No real, as far as where is it that I would identify support on this, well, that really is a little bit of a problem. You'd have to say, let's see, this window here was closed, so that's no longer useful to us. The only real useful from a candle standpoint is going to be all the way back at October the 2nd. The high is 38.19 because of the bearish engulfing candle that occurred the following trading session. So 38.19, that would be a big drop because you're at 39.80 out here. This whole cluster out here, you really have to stitch a number of things together in order to really find some kind of reversal candle, and that is inside the NASDAQ composite. If the NASDAQ composite can travel higher, where will it travel to? That's an excellent question. I would say you'd be looking at about the 40, 49 to 40.80 mark. Right now it is at 39.80, so about another 100 points north of where it is trading right now. We've got the Dow at 46, S&P is up 12 pennies. We'll be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Is flat. The composite's down 4 points. The Russell 2000 is flat out here. I laid the charts the upside this morning. Google's up $5 and change. VoxelJet is up 45. Precision Cast Parts, PCP up 456. Baidu's up $4.51. To the downside, lead the charge here. You've got Netflix off about $7. Tesla down about $6. American Railcar Industries, ARII. That's off about $3. Yelp is yelping for help. It's down $2.70, nearly 4% off of its close from Friday. Pioneer Natural Resources down $3, about 1.5% out here. Let's go check in on the currencies. Let's go check in on the currency market. Let's see what we've got going on out here. Let's take a look at, let's see what pops up on the screen here. First, U.S. dollar, Japanese yen. So if we take a look at a number of different patterns out here, let's get rid of the retracements. This had set up a nice little Gartley buy pattern, which now has turned into an A to B equals CD up. The question is going to be, let me get rid of the larger one out here. Well, I don't know which one I'm going to delete, but I'll delete that one. The red, yeah, that one is, no, this one is probably the red one. Let's see how good. Yeah, there we go. Okay, so there's your A to B equals CD. This is the one that's coming off of the lows out here from October the 8th. You had the U.S. dollar, Japanese yen make a low at 96.55, makes its way up to the high here. Bearish engulfing candle October 17th out at 98.94, pulls back, and that pullback looks like at least a 0.786, if not a tad lower than that. 786 is what the number was. 1-to-1, A to B equals CD. It hit that number 99.37. Did that on the trading session here of November the 7th. But then immediately, and even though it intraday it hit that and then moved lower, the following day, the bulls came to the rescue of the U.S. dollar, Japanese yen. That said, the next level, 1 to 1.272. Well, it hit that with the wide-ranging bar on November the 14th out there. Wide-ranging bars coming into a area that is projected. That usually says it wants to go up to the next level. That is most likely what is underway here inside of the U.S. dollar, Japanese yen. Now, what it has done today so far, it is a bearish engulfing candle. If we were to close underneath 100.01, even Steven out there, it would set up a bearish engulfing candle. You need some confirmation tomorrow. Otherwise, what you're looking at is a move up to about 100.87, at least a test of the, here's what I would be doing if you were inside of this trade. I would really be focused on the swing point that it's trading within, and that is a swing point from September the 11th out there. So the low is 99.78 if you are long. A close below below that area on the U.S. dollar, Japanese yen. Number one, today you'd have a bearish engulfing. Number two, you would be rejecting a swing point, and you would have already made the 1 to 1.272. So you'd have some real reasons to be cautious out here. If you don't see that, price doesn't close below 100.376 out there. That's the low of September 11th. That says, okay, a test of the high of that session, 100.59, but more likely 100.87, which is your 1 to 1.618 AB equals CD pattern. That is on the U.S. dollar, Japanese yen. Let's take a look at the Great British Pound, U.S. dollar. That is in a consolidation. It wants higher price out here. The high price that it wants to move to the top of the consolidation box. We'll just slide that over a little bit here to the right. That takes us into the swing points of October 23rd, around the 162.5 level out there. It looks like that is what the Great British Pound U.S. dollar currency pair wants to do. If we take a look at the euro, see what the Queen is up to here this morning. The Queen here above the 0.382 retracement of its last leg down. Last leg down being off of the highs out here from October 25th all the way down to the low that was put in on November 7th. If we take a look at that retracement, the 0.382 level is 1.34995. It is above that area. It's trading out at 135.25 right now. That says it wants to get to that next floor. The next level up is 136.26. That ought to put a little bit of a pinch inside of the U.S. dollar index, with this being about, 55% of the weighting structure in here. But the euro looks like it wants some higher price at the moment. But let me go switch over and take a look at my intraday chart here, the 30-minute chart for the euro. Oh, I've got the U.S. dollar, Japanese yen out here. Now that says, hey, when I was just talking about higher price, see how the Japanese yen is broken to the downside of that short-term rising price channel out here? It says one must pay attention. In order for the U.S. dollar, Japanese yen to get to those higher prices are going to have to get back in there quickly. Get back inside that rising price channel. Looks like it's got the opportunity to do that here shortly. Right now, the Dow is up 47. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 43. S&P is up 38 cents. And one of the tools that I was have been working on, and I really was able to bring this thing to a fruition, made it an outcome, not a goal out there, is identifying is electronically, automatically being able to identify the primary trading range boundary lines out there. Now, those are the horizontal support and resistance, natural horizontal and support resistance areas that Bud Rolfe so kindly brought to our attention out here, and it's really in line a little bit with the Japanese candlestick charting, which is just simply that the body of the candle truly is the essence of price out here. The candlestick wicks, or sometimes referred to as shadows, out there, those are just simply the extremes. Now, our man Z in the den. He is always giving out information, so let's give something back to him. He was taking a look at the 10-year Treasury yields, and now I've got a weekly chart. I'm going to go ahead and apply this tool to the chart out here. So this is a intermediate time frame versus a shorter term time frame, but nonetheless, intermediate is a priority with regard to trend and seeing things break out here. So let's go ahead and apply that tool to this, and it's a cool tool because it works only with the Ensign software that I use out here. And what I've done is it will take all the data on the chart, all the data that's on the chart out here. In this case, on the 10-year, my chart data goes back to 1993, and it's going to identify the largest number of co-located, means doesn't matter whether it's an open or closed, just looking for, again, that essence of price out here. So let's call this little tool up here, and let's hit the run button, hit my number 1. It's out there right now identifying the largest number of co-located opens and closes. And what it does, it gives us what I'll call a super primary trading range number. That is 5%. 5.05 is the number. You can see 31 occurrences. Really, 5.05 and 4.7 are the two numbers out here that you would take a look at. We'll just simply go with the 5%, the 5.05. Now, I'm going to come back to this chart out here. I'll show you how I actually go ahead and use this. I'm going to get rid of the parallel lines because that's just something I'm toying with right now with regard to automatically. In a day or two, what you'll see me be able to do is actually just hit one button, and then it does all the calculations. It'll apply the lines on the chart, and boom, voila, it'll be sitting right there. And take away all the guesswork out here of trying to figure out where's the largest number of co-located opens and closes. Time is a valuable thing, folks. Time is something we just simply can't get back, and we're always about trying to become efficient. So the way that I work with this tool here is identifies what I call the super primary boundary line out here. I'm going to use that as 5.05. Oops, I didn't want that tool. I wanted to hit my parallel. So I'm just going to locate the on my left-hand side here. I'm trying to line up my cursor with 5.05. There we go, 5.05. Come across the other right-hand side of the screen. Get that to line up from a horizontal standpoint. I've lined it up. So we go from 5.05. The next level is 5.75 out here. So just got to get to the 5.75 level. Now we'll just simply go ahead and move these down. Boom, voila. It's, even doing it this way, it's not exactly like it's slow or anything like that. Now I'm going to come all the way down to the bottom, the 1.55 range out here. 1.55, because that is I don't know if that was it. Hold on, let me make sure. So at 505, 430, 360, 295, 220. Yeah, 155 is it. So 155 is the number I want to actually hit out here. Boom. Okay. So 155. So there's your primary trading range boundary lines on the weekly chart out here. Now, how cool is this? Z, I don't know if this would have really helped you in your trading out here to have known this, but I know that he uses this as a gauge to identify where to come in on, short trades, maybe long trades. I don't know if Z takes many long trades inside of the 30-year Treasury out here. But if we take a look at, as price was breaking above a consolidation level, it also ran right into the top of this little primary trading range boundary, right around the 3% level. Actually closed out at 2.94 out here. Now what we've seen is a move back into the midpoint area, which could be setting up an A to B equals CD down. And if we take a look at that A to B equals CD down, this is a weekly chart as one of the potentials out here. The A to B equals CD down takes you right back down to the bottom of the, let me get there, there you go, to the bottom of this prior trading range boundary line that it broke off. Now, on the weekly chart, you can see it broke through with conviction. That wide-ranging bar from June 21st never came back to retest it. And that is a likely outcome out here, is that, in fact, we could be seeing an A to B equals CD down, come back and test about the 223 type of level, and then from there move higher out here. So that is on a weekly chart for the 10-year Treasury yield. Now, we can switch this over to an intraday time period. I don't know, what's the intraday time period? Z, maybe you can type it in the den that you would actually use for this. It's so helpful to everybody outside there. Let's see if we can be a little bit of use to him. Don't know if it's a 30-minute or 120-minute. Is there an intraday time frame, if you're listening in, that you actually use that for? Let's see if I switch over to a 30-minute. Let's see if there's enough data, enough touch points or contact points out here. And I don't know if there, well, I guess there's, let me see if I can refresh this thing and go back even further. Okay, so 30 minutes it is. Let's see if I can get some more data out here. This goes back to July. Let's see, still to June. Okay, so that's about all the data I can get. Let's get rid of the volume settings. I don't need that. Let's go ahead and run that tool again on the 30-minute chart, and let's see what pops up here as far as our settings. There we go. So you got 2.6. So let's come back here. We're going to do the same thing so we know what it is that we're looking for. Let's try to do this as efficiently as I can. So we know where our super primary number is. It's 2.62 because we've had 27 points of contact at that level. 2.62 right here, 262. We come all the way over to 2.62. Hey, how about that? Our next level out here, let me get up to the 262, is going to be 2.715. So if I come up to, I can only get to 2.71. So 2.71, right about there. Click, boom, done. And so there are our primary trading range boundary lines. Now let's go ahead and pull this lower by a little bit. So we got 262. Let's come down to 2.43 as the number. So I got 2.43, and there for you. Z, in essence, is on your 30-minute chart. Those are the interest rates that you're looking at. You can see that price is now broken down inside of this primary trade range. That says that, you know what, you can see it moved down to about the 2.6 level out there. I will go ahead and email that chart for you. In any event, let's see. Let's go take a look here. What did I during the break? What was I looking at out there? Well, we're looking at the currency pair. Let's do this on the currency pairs out here. We're looking at the euro. So let's come back to the euro because there's a lot of folks that actually trade the euro. Here's the 120-minute chart for the euro out here. So let's do the same thing. Let's run that same thing on the screen. And so let me come over here, get that program going, hit the euro. Let me run this thing. Let's see what it comes back to with us on a 120-minute chart for its primary trading range numbers out here. Give me this, give me that, delete that. So our super primary level is $1.35 out here. Inside of the euro. So we're going to get down to the $1.35 or up to the $1.35 level. I can see here with the euro, and I'm going to try to change this tool if I can to give me more decimal points out there. Maybe that's something I need to do. So right at $1.35, yeah, I'm going to have to. In fact, I'm going to do that before I actually do that on the chart on the currency pair here because it's got too wide of a range out here inside of the euro. So I'm not going to do that. I'll just instead change the software. I'm not going to change it right here while we're on the air. But what I can do is let's go and actually take a look at some of the sectors within inside of the S&P 500. Let's go do that. And I love taking a look at the weekly charts out here because they just simply give you a great gauge as to the actual core trend that you're seeing inside of a equity. So let's take a look at the number. Everybody, a lot of folks like to trade the energy sector. So let's take a look at the XLE. So here is a weekly chart for the XLE. Takes us back to 1999. So we can go take a look at what the primary trading range boundary lines are inside of the XLE. Go ahead and pull that up on our screen here. Let's hit the run. It's going to give us our numbers. It's going to give us our core count. Our core count comes to 6970 as the number out here. So let's start with 6970. Let's draw the horizontal lines. We're going to use my little parallel tool out here. So it's 6970. 6973 is the number I'm going to be using here right now. 6973. And then my next area that I want to pay attention to is two levels above that. That's going to be 7708. So it's 7708. Let's get up here. 77. Come on. 70. 7738. 7705. That's going to have to be the magic man, the magic number out there. If you do have an Apple iPhone and you use Siri out there, go ahead and type in who is the magic man, because the result you're going to get, it truly is the magic man, and it's a cool thing to. I don't know how they programmed it, but it's very, very cool out there. The magic man, they say, is Pavel Datsyuk, and if you ever watched him play hockey, you know that is the case out there. So I don't know what that black line was going across my screen out here. As we take a look at the energy sector right now, it's kind of hit a mid. This is on a weekly chart here. It's hit a mid-level primary trading range boundary line out here at the 87.50-ish mark, 88 level out here. So you can see it is suggesting that it actually wants higher price. Of course, what's that all about? That would be about ExxonMobil out here. If we take a look at ExxonMobil, let's pull that chart up on my screen here for the moment. ExxonMobil, you had Warren Buffett buying in, and Warren Buffett was buying in, I would imagine, at the bottom of the consolidation. What is it, about 40 million shares or so that he had accumulated? Well, if he started buying down at the bottom, it took a few days, most certainly, to do that. We saw that ExxonMobil was traveling in a nice sideways consolidation range out here, a 7-point consolidation range. It has broken through that level and has done it with some nice volume on Friday. 18 million shares to the upside right now. It's trying to get above its most recent swing point high, which was July 24th. Is it the 24th? Let me see here. It is July 23rd, which is 95.49 or 95.61. That swing point has 7.3 million shares. You are above it today with 4.8 million shares. So if you put it together, ExxonMobil, by the way, is about 36% or more, something like that, of the energy sector. So you've got a breakout inside of the energy sector, 7-point move inside the XLE, or inside ExxonMobil. You got at 93 says ExxonMobil wants to get to 100. And if you go back to the weekly chart out here, that would, with the heavy weighting inside of the energy sector, that would be enough to push the energy sector, the XLE, up to higher price. Of course, if you take a look at this weekly chart here, what you can also see is that the rising trend line coming off of the lows back here in June of 2012. That level has not broken. So any pullbacks out there, that's an area where you want to be paying attention to inside of the energy sector, inside of the XLE. But it most certainly can run up to its next swing point, its next primary trading range boundary line, which is also the highs out here from May in 2008 in the $91.42 range out there. So that is on the energy sector. Let's go take a look at let's look at the financial sector. Let's go take a look at the financial sector on a weekly basis. Let me find that chart out here. Let's go see what kind of touch point data we have on the weekly. Of course, that's going to take us all the way back because of all those highs out here. That's still, nonetheless, I want to run this anyways. Let's take a look at this here. Then we'll go take a look at it on a stock specific. So here are our, this. Let me get rid of those parallel lines. Let's draw that in here. So it says 2349 has seen the largest number of touches, an open or a close. 2349 being the number. Let's come take a look at 2349 out here. Looks like I can get to 2350 without a problem. Let's get up to 2350. There we go, 2350. Boom, 2350. And next touch point is going to be, looks like about 2682 as a primary trading range boundary line. 2682. Let's get up here. 2680. Yeah, 2680 will work. Oh, geez, let me see here. Forgot to do this. There we go. Now let's go ahead and pull these down a little bit lower. So I had 2349 was the number. 1, 2, 3. 1350. Let's just bring this down to 1350. Give us the numbers to be paying attention to out here. 1350. Looks like 1352. Yeah, 1349. There you go. So now as we pull this back inside of the financial sector out here, you can see that it is up above its primary trading range boundary. It actually says that it wants to go ahead and, let me get rid of this. Let's take a look at a couple of the lines that are on the chart out here. The black diagonal line, that was a rising trend line coming off on November 16th. And the financial sector broke below that on August 30th with conviction. Hasn't been able to break above that level here just yet. But last week, it had 166 million shares, getting up over a swing point that had 161 million shares. So the financial sector most certainly can run higher as well. Right now, the Dow's up 48. S&P is totally flat, up 99 cents. Trading at $17.99. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi. I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow's up 47 points right now. S&P up 1.5. NASDAQ is flat. NASDAQ 100 down 3. New York Stock Exchange up 21 points. You've got net advancing issues 276 out here. It was a full moon on Sunday. Let's go check out the lunar chart out here. Let's take a look at the full moon and the new moons out here as applied to the S&P 500. So we got a full moon coming in. Question is this full moon here going to mark a high? Last time we saw a full moon mark a high, it was on September the 19th. That trading, that was actually during the week out here. So we know that Friday was not the high of the full moon with it coming in on a Sunday. The question would be, is it going to be today, or is it going to be like many of the other full moons during the middle of a move out here? It just really seemed to have no significant impact whatsoever. You can see full moons here typically marking lows or markets moving higher off of them, but it's not always the case out there. So we did have a full moon come in. The last full moon, that came in on October the 18th. It absolutely had no impact on the market directionally, if you will. Same thing on this new moon that came in on November the November the 1st out here. So you do have a full moon coming in, but these things are not exactly spot on. So I would be taking a look at other patterns, other things out there to set up to understand whether or not prices want to continue to move higher out there. One of those things that you want to be focused on and paying attention is what's going on inside the currency market, the actual jet fuel for the market moving higher. That's going to be the euro Japanese yen. Here's the daily chart. We haven't seen a breakout of this. If our markets are going to move higher, they can't do it without bringing along the euro Japanese yen, or vice versa out here, the euro Japanese yen. Now, that divergence that did exist in the marketplace, well, that divergence is somewhat still there, but a breakout above this consolidation, and that divergence is going to be gone. And what I'm referring to is this, folks. If we go take a look here, I have a series of tools or charts that I take a look at to determine whether or not there's some divergence. Now, these things can only be used to identify divergence in which way price will normally break when things resolve themselves. They don't give you the time frame. And up on the top portion of the chart out here, you can see that this is the well, you can't, but I'm telling you, it's the S&P 500. You can see that it has moved higher off of the October 29th-ish type time frame. Whereas right now, inside of the bottom portion of the chart here, that happens to be the euro-yen, you can see pretty much parallel. We see just a move higher, a little breakout of that consolidation, and this will vanish. That is important out there because it is this currency pair, when they do have a correlation that diverges, it is a currency pair that always wins the battle here. So just a slight break above that consolidation that we were looking at will put, in fact, that one to rest. And this one is the one that probably works more, not probably, this is the one that works more often than any of the other divergent charts that we pay attention to. Used to really focus in on like high-grade copper and the stock market because it used to correlate so well, and that has just simply become useless at this stage. So that's become disconnected out there, so I don't pay as much attention to those divergences in the marketplace. So with just a few minutes to go, what is it that you're going to focus on? Well, one thing, 559 net declining issues. What would be needed in order for the bears to take control of the New York Stock Exchange? It got the green light on Friday when the price oscillators and the summation index turned up. The next thing you need to do is stay tuned because our man Basil Chapman is up next. It is Marvelous Monday. After Basil, we've got Larry Pesavento, It's a Beautiful Thing, and then Daryl Martin, David White, two more beautiful things, and the Tom O'Brien Show from 4 to 6, folks. So have a great Monday. Look forward to seeing you in the morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.